Welcome to Green Money Matters, the podcast where your financial future meets the planet's well-being, bringing you the latest on climate issues and uncovering new and exciting investment opportunities that make a positive impact.
And I'm Chris Everett, your guide to sustainable investing, ESG funds, and all things green. Each week, we'll explore the intersection of money and sustainability, showing you how investing wisely can create a greener world and grow your money.
So get ready to invest with a conscience and join the growing movement of individuals who are reshaping the financial landscape. Welcome to Green Money Matters.
So, welcome to Bonnie Gurry. Bonnie is the CEO and co-founder of GreenPortfolio. Bonnie, tell us a little bit about yourself. Tell us about GreenPortfolio and what was your aha moment that brought you to GreenPortfolio?
So I've worked most of my career in climate from a variety of different angles. My original training is as a mechanical engineer, actually. I worked both in renewable energy projects as well as on the manufacturing side of renewable energy, solar panels and wind farms and things like that. A lot of the materials that would go into these projects. And throughout all of that, I was just extremely frustrated that I couldn't manage effectively the climate impact of my own money, especially when I was working on projects and seeing how institutional players and institutional managers would manage projects and get very great returns, but also have really great environmental impact. You know, I wanted that for my own portfolio and just found it difficult to do. It's just really frustrating. It's something I've been chewing on for over a decade. And then a few years ago, started just kind of as a side project, honestly. I started just trying to keep track of all the different kinds of opportunities that were available for the common person to start to green their finances. Everything from bank accounts to crowd investing to, exchange traded funds or companies that were having a positive impact. And slowly this resource kind of snowballed on its own, and I kept meeting more people who are also trying to manage the climate impact of their money.
Once you start digging into it, you start to realize it's one of the most impactful things you could be doing.
Now, you're on a big mission. You want to take out $4 trillion or decarbonize $4 trillion from the system. How are you going to go about that? And how far along are you?
So we are still at the beginning of that journey. We are currently at a bit over 50 million, actually, of assets that we are currently assessing for climate impact. We are on a mission to get that to 4 trillion. And that's just looking at, the number of individuals out there that want to do this. And, how can we help them to do it? And what kind of impact can that have? What kinds of influence can this $4 trillion have if it's put to use effectively? I think a lot of people, if they could press a button that would make it so that their money was not funding projects fueling climate change, not funding banks, funding projects fueling climate change, they would probably press that button. And if we all did that at once, if we all were able to actively choose to manage our money effectively and move that kind of influence, it could be game changing. It's one of the sectors that people don't think about when they think about tackling climate change. And it is one of the most important because it under simply everything. And, while people have been distracted with paper straws and other, small actions which make them feel either guilt or power, I'm never quite sure, in the meantime, they have been supporting entities and banks that are working against their general values and interests. So, we see it as a real opportunity, and we're really excited to kind of bring this message and this capability to right now Americans, but hopefully more people all over the world someday.
I want to get on to the topic of exactly what sort of impact sustainable or responsible investing can have in comparison to all the other things we do, like choose paper straws instead of plastic ones. But just to get back to that $4 trillion, that's an immense goal. What would that look like if you achieved it? What sort of impact would that have?
So the way that we look at impact is really, we actually relied on quite a few experts in the field, some of whom are actually in Germany, who were looking at what happens when a company or a fund is influenced or affected by calls to decarbonize their practices. How do those firms behave both before and after they feel this pressure to change their business practices? And it was found that when these funds did feel this kind of pressure, they not only reduced their emissions in the first year compared to similar companies that did not feel the same pressure by 2%, they continued doing so in the future. It had a pretty long carry-on effect as well. And we think that's incredibly powerful, that we can, cause these companies to effectively change their business practices and to effectively reduce the amount of carbon and other kinds of climate-causing emissions for a longer term. So that's really how we have gone about trying to understand what effect could moving money in this sector have. We're still looking for some really good data on how banks behave when they face these kinds of collective actions. It's not quite as good a data on that, but I think we're starting to see, especially in the US, more and more banks are feeling the pressure from their customers that they do not want their banks to have this, to be carrying on in this manner. So we're excited to see. I'm sure we'll see some good data on that at some point soon.
Is it only the ability to obtain the data? Is the data not there? Is it not in a decent or analytical format? Or are people not giving up the data or obscuring it in other ways?
We will never have perfect data on emissions. Even the companies that are doing a great job putting out climate data or emissions data, it is their best estimation, right? And I think sometimes in the climate communities, we get really hung up on having perfect data. Who's better, worse? And when you actually look at who is doing what, both amongst companies and banks, it's not a bell curve where they're, on average, in the middle. It is exponential. The bad players are much, much worse than everyone else, right? So to me, the fact that we don't have perfect data on exactly what a bank is doing or exactly what a company is doing, we can still work with what we have to put pressure on the worst actors and say, we don't know exactly what you're doing, but we know that you're amongst some of the worst players in the world in terms of how you are managing your business and the amount of carbon you are putting into the air without cost. And for banks, it's interesting. We actually have pretty decent data on banks. One, through their own disclosure. So you can look at, for many banks, their loan portfolios, how they are doing business. They put out a decent amount of data on that, which we analyze. And then luckily, there are actually quite a number of groups that go and look at what projects are out there in the world funding oil and gas exploration and work backwards to figure out who has funded those projects. So we actually have a pretty decent idea of which banks are the absolute worst in the world without too much question, right? Like the data is not perfect, but we are actually pretty able to point out which banks are the worst players right now without much trouble.
Who are your top 5 or bottom 5?
So Canadian banks, without question, are pretty much the worst in the world. I mean, there's a lot of oil and gas exploration in Canada. They fund a lot of that. In the U.S., Chase is pretty bad still, Citi. All of these banks are still funding a lot of pretty intensive projects. It does get complicated, right? A lot of these banks are also funding green projects. They are also funding wind farms and EV loans. It is not a black and white issue, which complicates things, right? So, we do try to provide our users with the kind of nuance to understand that, in addition to funding bad things, they also have been funding some good things on occasion as well. So how can we continue to encourage them to, fund positive projects instead of these climate negative projects? But so, for banks, we have enough data to make an informed decision. It's just a matter of explaining to people that they can use that data to move their money and to have influence immediately. Like open a new bank account, right? Close the other one and tell them why. I'm more excited also to see where else we can go in this industry. Insurance. If we can, keep insurance companies from backing projects in this sector, it would have a huge influence. If you couldn't get insurance for your new oil exploration project in wherever.
Yeah. I mean, I think it's interesting with insurance companies, isn't it? Because, in some respects, they've got an incentive not to fund climate damaging activities because, the back end of their business is then taking on liability for the cost implications for climate catastrophes in terms of flooding and everything else. Are you seeing much more sway on that side?
Not yet. And a lot of it is because the way the insurance industry works, many of the players that fund commercial projects or, like oil and gas exploration, et cetera, are not the same people who are, insuring houses in Florida. So they're not actually necessarily feeling the same pain. So while they're all in the same industry, they all hold very different baskets of risk. But we are starting to see some, and this is where data in this field is so important, we're starting to see some really good movement in this space where insurers of, let's say, of Apple. So Apple has insurance across its many business units. They have buildings all over the world. They have manufacturing facilities all over the world. And we're starting to see some really good risk models about how climate change will actually affect these companies going forward based on where their physical assets are, right? It's kind of a new nuance that they're having to incorporate into insurance. And this is another aspect of managing your money with climate in mind that I think the average consumer is only just starting to think about, which is what is the risk of climate change to your personal portfolio? It's something that certainly institutional players think about regularly and with increasing frequency, but it's something the average person has very little insight on. So I think that also is kind of the next wave we're going to see is how is climate risk going to affect our financial systems and how robust is it, honestly? Because I don't think that we're capturing the risk associated with climate change effectively yet. The change is happening so quickly, and these are industries that move very slowly. So I think that will be a really interesting kind of next paradigm in finance is how are we going to deal with all of this risk that's affecting everyone?
I guess the best measure of risk assessment is an ESG rating, isn't it? I mean, I know you have a particular view on how we interpret or look at ESG type funds.
Yeah, so, I mean, it's interesting when we speak with even fairly informed investors about what do you think an ESG rating is? What do you think the E in ESG is supposed to be doing? And most of them say something to the effect of, it says how good the company is for the environment. That's what most people think that the E in ESG means, when it's honestly kind of the literal opposite. ESG is supposed to be more, or was originally defined to some degree, as a risk mitigation tool. It's what are the risks of the environment to the company? How well run is the company that it can withstand these risks, these environmental risks, right? Which is a perfectly valid tool that one might want to use to manage an institutional fund. I think it got into some real trouble when it started being marketed with little oversight to the average investor who did not understand what they were buying or why they were paying a higher fee. And I think that, we're going to continue to see ESG funds for at least the near future. I don't think they're going away. And I think the efforts by both the European markets as well as the American markets to remove a lot of the greenwashing from marketing materials around ESG funds has significantly helped this situation. But I think they do very little to actually help the average person understand the climate impact of their investments.
No, as I saw a post you put out this morning, actually, saying that most investors simply interpret an ESG rating as meaning that an ETF or a fund doesn't invest in fossil fuels. Clearly, those two don't equate at all. How does GreenPortfolio give a fair assessment, a good indication of what is climate positive?
So just to be perfectly clear, we are not a registered investment advisor currently. We do not tell you, Chris, how to manage your money or what to buy and sell. So everything we're giving is just informational. We're just like helping you get a general audit of your finances to understand, simple things to begin with. Are you invested in fossil fuels? Most of our users would like to know that. What percentage of my money is in a straight up fossil fuel company or coal? Even people who have been very supposedly careful about choosing, ESG funds, things like that, generally find their exposure to be around 8%, which is generally a shock to them. They're like very surprised that they have such carbon intensive companies in their portfolio. So that's really one of the first things we try to do, is just give you kind of a baseline understanding of simple things, right? Because ESG, because of the way ESG scores work, they tend to obscure the fact that you are holding fossil fuel companies by saying they have a good environmental rating, right? But, it's Exxon with a good environmental rating. And so one of the things we do is we have built a custom climate score that looks at a fund or a company, and we don't look at things based on what industry you're in. We don't say Exxon is good because it's better than other fossil fuel companies. So that was one of the first things we did, is we were like, this doesn't make any sense to most people to look at it that way. And then what we have built, we have a machine learning model that pulls in quite a bit of data, goes through all of that, and also relies quite a bit on an estimation model of the carbon intensity of a company. And we try to closely link our climate score with how carbon intensive the company is. How efficient are you as a company or a fund or a bank at doing your business while, not putting out a lot of carbon? And that's logical to people, And so that's really what we wanted, was something that was easy to understand, easy to interpret, and really allows you to see the worst players in your basket of financial products.
Excellent. So as a GreenPortfolio user, I can go on your platform. I can choose the least harmful retail bank. I can choose the least harmful or most climate-friendly portfolio of investments to create a fund for myself. And I can acquire them through your platform. Is that correct?
No, not at all. So just to be clear, we do not buy or sell securities on your behalf or for anyone. So yeah, we are not licensed to do that at all. So I do want to make that very clear, that we do not help you make financial decisions. We don't make financial decisions on your behalf, any of that.
You do plan to be in the future?
What we really see is, so we do plan to get likely licensed to be able to provide more services. You never say never, but at this point, we don't see ourselves as stepping into that role of a full service financial advisor, because, we are laser focused on climate, and we understand, however, that people have many other financial goals than just their climate goals, right? And we see ourselves as helping you with a climate audit of your finances. What we want to do next is really be able to connect our users, financial services providers, who can help them, with a more full-fledged product offering of, tax loss harvesting, and also diversification and risk and other aspects as well.
Okay, perfect. So how does your business actually work?
We've been, at this point, building out the platform, onboarding users, and in this next phase of our journey, we're really going to start rolling out kind of these additional services. But we wanted to understand first what users actually wanted, who actually, is hungry for this kind of information, and what do they want to do with it next. So really what we were building very consciously was a product that would help us to kind of unlock this next step in our journey. But it's been really interesting connecting with our users and learning about what they're looking for and what their goals are. And especially in the United States, we're about to undergo the largest wealth transfer of assets ever. Gen X and millennials are expected to inherit around $84 trillion in assets. Some of that is already slated to go to charities, et cetera. So it goes down to around
$84 trillion.
Yeah, $84 trillion in assets are about to be transferred. And 85% will start looking for a new financial advisor to help them to manage their money for a variety of reasons. But climate is one of them. 91% of millennials want to know the environmental impact of their finances. And currently that's, hard to find in the financial services industry. So we really see ourselves as this home base almost for your climate goals, to try to help you to find the financial products and services and providers that will actually help you manage this money you're inheriting or this money you're earning, and to put it with providers who will actually listen to you and follow through on what you ask when it comes to climate.
Now, a few years ago, Nordea came up with this factor that how you invest, and if you invest sustainably, that can have something like 27 times the impact of all the other things we normally do. Have paper straws, not plastic ones, take fewer showers, take the train perhaps instead of the plane, all those sorts of things. It's a number that's been thrown around and used and misused for a few years now. But do you have a grasp or a sense of how much of an impact sustainable investing can have in comparison to all the other things that we as individuals do?
Yeah, so I've dug through Nordea's original numbers, and then that research to some degree has been carried on by a UK entity called Make My Money Matter. And, I fully agree with their assessment. Of course, that number varies based on how much money you have. If you are a younger person with very little money, it still matters where you bank, but maybe it does matter more that you fly less, right? But if you are an older person, you're married, you have gained a significant amount of wealth, you have done retrofitting on your home to make it energy efficient, it is absolutely one of the most effective things you can do. And of course, we can argue magnitude. Maybe it's only 10 times more effective than average lifestyle changes. Maybe it's only 5 times more effective. Maybe 20 is an overestimate. It's still dramatically more effective than, these smaller lifestyle changes, and generally simpler to do, right? There is some upfront pain of finding the new bank and changing or, readjusting your finances, etc. But it's not something you need to do every single day, right? Once you do it once or quarterly, it's kind of a maintenance sort of thing, which you should be doing for your finances anyways, right? So to us, it's such a opportunity because it is so impactful and so much easier. We often speak with our users, especially younger users who have kind of decided not to have kids because of climate change, are making major decisions about where they live because of climate change, all of these things. And then you ask, well, have you, switched your bank or looked at the impact of your money? And they haven't really thought about it. And I would say do that first before you start making these other lifestyle changes, because it is really important. And so I think the reason these numbers are coming out of Europe first, you guys are generally a good 5 years ahead of us at least on climate policy, for which I personally am very thankful that the Europe decisions about financial disclosures, et cetera, when it comes to climate heavily influence what happens in the U.S. But it can be frustrating that for some reason we're unwilling to look at, data that comes from Europe and apply it to our own lives here in the U.S. And I think we're starting to catch up. We're seeing a lot more actions around the impact a person's finances can have on climate change. There were, just some recent articles in Axios and TechCrunch and some of the larger publications on this, actually, which was super exciting to see it get some more mainstream press, because the more it becomes a regular kind of vernacular, the easier it is for us to explain why this is so important.
Yeah. I mean, you're now in an election year, and the noise and emotion is also rising exponentially. To what extent are you finding kickback with anti-woke funds and that sort of political posturing?
Yeah, it was funny because we went through this period in the US where just like, climate people didn't really like ESG funds. The right wasn't liking ESG funds. And they did lose a little bit of wind in their sails, but we have seen already some kind of rebranding, repositioning, which I honestly think is very healthy, that they were kind of taken off their pedestal and people were digging into how they were doing things. And it is frustrating to see how the election year might rail some aspects of this. But I also think it's a major opportunity, and we're going to see climate come up more and more. It's one of the top issues, right? And I think people are starting to realize that it's affecting their day-to-day lives, right? In a way it wasn't 4 years ago, frankly. I live in New York, and we've had a number of climate events. The sky turned orange for several days, right? That really all of a sudden kind of hit home for people that oh, it's me too. I also am going to start feeling this. The fact that we've had almost no winter, right? So I think that it will become more on the national stage this year. And hopefully it will just continue to kind of, inform people, hopefully. There's going to be a subset of the population that's going to go on their own path. But I don't know that we would have convinced them anyways. So I guess that's okay. But on the whole, especially Gen Z has just taken this issue by the horns and owned it, and they're fighting tooth and nail. And I think that does matter. And I think that they are getting more and more national attention, and that's great.
Yeah, I think putting a spotlight on these things certainly can't do it any harm. I suppose one of the questions, if climate positive funds are, offering better returns, then any sort of political posturing around it is going to be simply background noise. What do you say to the question or the statement that there is a trade-off between responsible funds or responsible investing or climate funds and return?
So people always say this, you're going to lose money if you manage your money with a climate lens or a ESG lens. And that's really not been shown to be true, right? Some good numbers out of Morgan Stanley showed that perhaps there's up to a 1% difference in returns. But honestly, it so heavily depends on how you define, climate forward or sustainable or ESG. That it's a bit difficult to actually measure the hit it takes. And that's why you haven't actually seen a number that comes out saying, if you invest with climate in mind, you're going to lose X percent. Because that number isn't out there, right? Because there's so many different ways to manage your money with climate in mind. And, if you 50 years ago invested all your money in renewable companies or, clean energy companies versus fossil fuel companies, you actually will do much better if you had just put all your money into clean energy companies. And that's because they're not inflationary, they're way less volatile. It's true that they're, often oil companies have these record years, but not always, right? And so I think that is something that, even from a societal point of view, whenever I talk to people who are more on the right, and they're we should be investing in oil and gas because, it's a steady source of energy. But if you look at how renewable energy fights inflation, right, you should wholeheartedly support that because there is nothing better. You install it once and then you have a perfectly steady supply of energy for 20 years. You know how much it's going to cost, et cetera. Most shale gas projects in the U.S. have actually not really made money. It's also kind of a dirty little secret of the oil and gas industry because they lose so much on the down years, right? So it is not a clear-cut yes or no answer, I guess it depends how you personally define something that is climate positive versus not climate negative. It also depends on your risk tolerance, right? So I think there's a lot of ways that you can approach managing your money with climate in mind that will result in very different outcomes when it comes to investments. And I think that's true of any investment strategy. So to us, climate is one part of the information you need to effectively manage your money.
Yeah, absolutely. I mean, I read relatively recently, they did some back testing on portfolios that held fossil fuel funds, and they backdated over the last 100 years and did it in 25-year chunks. And taking fossil fuels out of a portfolio made fraction of a percentage difference overall.
That's pretty much the case. And so I think that concern has been largely overblown. It's the risk of the unknown, honestly. And I think also we're going to be seeing, perhaps not in the United States immediately, but in other parts of the world, fossil fuel companies and other carbon-intensive industries being held accountable for their cost to society, at least in some aspect, right? And I don't know that risk is really baked into people's long-term views on fossil fuel assets either. I generally think it isn't. But that should be a cost that they are carrying, right? But historically have not.
Yeah, I mean, we saw it with the tobacco companies, the sort of lawsuits that were brought against tobacco companies for the consequences of smoking tobacco and not actually fessing up to the damaging that was causing. Oil companies have known since the 60s or 70s the sort of damage they were doing to the environment, to the climate overall. I do expect the US to take a good lead on some lawsuits here.
We do love lawsuits, so we'll see. But could be a while, but we'll see. There are some actually going through the courts right now that are really interesting. Many being pushed by Gen Z again about how fossil fuel companies are allowed to either drill in their communities or be in the endowment for their college, et cetera, that are really interesting, that are slowly making their way through the courts. So we'll see. But we kind of have to confront this on all angles, in my opinion, whether it's voting or lawsuits or managing your money or all of the above, right? So to me, your money is one of the best ways you can vote for the kind of future we want to see for our society.
Yeah, and on that subject in particular, where are you seeing the flows of investment go? Are you seeing the largest flows going towards clean energy or to cleanups or?
There has been kind of a move away from ESG on both, as I mentioned before, the right and left, but they continue to be, and I think will continue to be, a part of most people's portfolio in some perspective. I have some in my own personal portfolio because many of them are quite good, right? And I think what we're seeing, and I hope we'll continue to see, is better reporting requirements by the U.S. government, requiring that if you say you are running a sustainable fund, what does that mean? Well, how do you define sustainability, right, as a fund manager? What metrics are you using to say that my fund is providing sustainable results? Sustainable can mean almost anything you want it to mean, right? But if you are running a very climate-focused fund, what does that mean? So to me, the best things that have been happening, the most important trend in this field is more and more transparency, better and better reporting. It is not unreasonable if you are providing a fund manager a higher fee that they should be providing more service to you, right? If you are paying significantly more for a fund than you would for just a standard index fund, you absolutely should be able to be getting a better understanding of how your money is being managed on your behalf. So to me, that's the number one trend that is so important to watch and will really help the average investor to take a look at their own money, look at their GreenPortfolio audit of their money, and start to say, what have I actually invested in? You don't, sometimes people are scared by reading the prospectus that goes with their fund. But I think there has been some real effort lately to make them more user-friendly and easier to understand and actually meaningful. Because before they would just say, it's ESG and be done with it. And now, no, if you say it's having sustainable results, you need to tell me what sustainable means.
We're working towards a positive outcome for the environment, for biodiversity, for the climate. One very strong aspect of that is how we invest, who we invest with, and what they do with our money. But are you do you remain positive and optimistic for a future in which all these actions actually have an effect?
Oh, I am. And I think we're going to see more financial innovation in this space, right? If we want to have a real industry around, carbon removal, that is going to be fueled by financial products that are, able to actually make a market for these kinds of activities. And we're starting to see that already. And I think that being able to access these kinds of products and being able to invest personally in the solutions we want to see is really the first step into being able to achieve the goals that we have to achieve, right? So, it's very challenging every time one of these reports comes out. And it's funny because people outside the climate world, I don't think they think about it that much, right? But for many of us, I think, 2030 is kind of this line that's been drawn that after we really got to get our act together right before 2030. And that is very soon, right? So to me, I think we'll get there. I don't know if we're getting there fast enough. That's really what concerns me. And then especially in the United States, I also think we'll get there, but not in the smartest, most cost-effective way possible. I think we're going to bumble around and spend way too much money on all sorts of things that won't actually achieve the results we want. But I do think that on the whole, things are trending the right way, but it's just simply not fast enough. So hopefully we can accelerate that and really find the solutions. Well, we have the solutions, but find the way to pay for these solutions and invest in these solutions so that we can set ourselves up for success in the future.
Yeah, brilliant. So GreenPortfolio is certainly playing its part. Where is GreenPortfolio going to be going over the next few years? What are your goals for this project?
Yeah, so we're aiming to get to 250 million, so $250 million in assets under assessment by the end of 2024. And, really looking at what other kinds of services we can provide. We're hoping to be able to kind of roll those out later this year. And just in general, being able to continue to introduce our users to more climate-friendly financial products. Not only because it delights them, but also we want to continue to kind of support this climate fintech ecosystem and to help these products become more and more mainstream. So we're excited about 2024. We think we're really just at the beginning of what we're building. 2023 was great. We were really excited by the support and enthusiasm of our users, and we're just really looking to see where we can go from here.
I love what GreenPortfolio are doing, making people aware of the opportunities out there, making people aware of the impact of their money. I think you're doing a brilliant job, and I think you're doing it immensely well. It's
been fantastic speaking with you, Chris. Thank you so much for having me on today. I really appreciate it. It was a great conversation, and I'm so glad that there are podcasts like yours now focused on green money. It does matter, right? So it's really fantastic.
Excellent. So, Bonnie Gurry, CEO of GreenPortfolio, thank you very much for joining me, and good luck with everything you're doing.
Thanks so much, Chris.
And that wraps up another episode of Green Money Matters. We hope you're feeling inspired to take your investments to new green heights. Remember, it's not just about the bottom line anymore. By aligning your investments with sustainable values, you have the power to shape a better future for generations to come.
If you enjoyed today's episode, be sure to subscribe to Green Money Matters on your favorite podcast platform and never miss an opportunity to grow your wealth sustainably. Together, let's make money matter for the planet.
And don't forget to leave us a review. We really would love to hear your thoughts or ideas for future episodes. Drop me a line by email at chris@greenmoneymatters.com.
Stay tuned for our next exciting episode, where we'll explore groundbreaking investment opportunities and unveil the secrets of successful sustainable investors. Until then, remember, green money matters. Because investing in our planet's future is the smartest choice you can make. Thanks for joining us.